One of the things that Steve brought up was Theresa May, the Prime Minister's situation. Can she get a deal done? I stress this only because what we've heard from Jean-Claude Juncker is, quote, there will be no third chance. There will be no further interpretations of the interpretations, no further assurances of the reassurances if the meaningful vote tomorrow, aka today, fails. So, should investors be worried given that situation?
Well, taking what Theresa May has negotiated, I mean, the key question, of course, is whether or not this brings the highly divided Brexiteers and DUP on board. In principle, there's nothing here that should bring them on board. Not a lot has changed. The key demands from them, this idea of an end date on the backstop or a unilateral way of getting out of it, neither boxes have been ticked here. But having said that, the calculation facing the Brexiteers is changing. Of course, the threat of a Brexit delay, potentially a long one, is now on the table. Equally, Parliament may, over the next couple of weeks, try and force some indicative votes on different Brexit options. Neither are particularly ideal for the Brexiteers because, in theory, we could get a softer Brexit or a second referendum emerging from those possibilities. So the calculation is changing, but the bar to get her deals is still set pretty high today, and that brings focus back to whether or not we get a delay to Article 50 later in the week.
All right, so let's take us through the calculations right now. What are the odds in your mind for what happens with these votes, and what then are the ripple effects? Are we going to see an economic impact in the UK, elsewhere in Europe, and if so, where will the most meaningful impacts be?
Sure. Well, I think the probability has gone higher today of May's deal passing. Admittedly, I still think she will lose that, but it may reduce the scale of the defeat to something, say, sub 100, which might have otherwise been a lot higher. Assuming she loses, that brings us on to the Article 50 extension. Now, nobody really knows how long this is going to last. The wind seems to be blowing towards a shorter time period, maybe just 2 to 3 months. And when we look at that for the economy, that means no deal is still very much on the horizon. And that means businesses are going to continue making their preparations for that risk, preparing for the threat of sudden customs checks, single market compliance checks. That's obviously costly, and that will keep a lid on growth. Now, should we get a move to a longer time extension, that would give businesses a little bit of a reprieve, may see a little bit of a growth rebound in the short term, but still, as I say, that no-deal threat still very much on the table.
We're seeing some activity right now. Some of the more active issues within the UK in trading, as we get started off this morning, are in real estate and the home builders. So is it fair to say that this level of optimism is just real-time handicapping of the potential for a deal to get done? Is that positivity in the UK real estate market, at least for today, somewhat justified? Or is this just a situation where we could see these things fade if a no-deal situation comes to the table?
Well, when it comes to real estate and housing, we've seen the housing market in the UK really come to a standstill, particularly in London and the South East, as that uncertainty has really picked up. Now, the key question is, does that uncertainty fade over the next couple of weeks? And I think probably the answer is no, unless Theresa May can get her deal through today. As I say, we just kick the can down the road on the Article 50 period. That prolongs the uncertainty, and in my view, that will keep a lid on housing market activity, at least in key areas of the UK, in the London and the South Eastern area.